it's a time of changes. Now is the time to move on. This is the time for solutions. Feel the motion. Be new is born. The any none of you. Now I'm connected to you. The any none of you. Be new will do it for you. This is the time for solutions. Be new is for you.
Y estamos de vuelta en BINVEST Mobility. ¿Qué tal? ¿Cómo estáis? ¿Cómo lleváis este jueves? No diría de infarto, pero sí estamos siempre aquí en el Mobility, en movimiento y viendo cómo pasan los avances rápidamente, cómo se mueve esa movilidad hacia el futuro, que ya es presente, siempre lo digo. Bueno, voy con otra pregunta. Estoy de preguntitas yo esta tarde. ¿Sabéis cuántos ciudadanas y ciudadanas europeos viven en entornos urbanos? Pues un 60%. Y también hemos escuchado que la cosa va a ir a más hasta llegar en los próximos años hasta un 70%. Son la inmensa mayoría. Y claro, esta población, pues claro, necesita moverse para ir, pues bueno, a trabajar, a comprar, a llevar a los niños al cole, para ir al cine, al médico, al supermercado, para acudir a una cita romántica. Claro, todo es importante. ¿Y sabéis qué tanto por ciento de las emisiones de CO2 representa esta movilidad urbana? Pues os lo voy a contar yo. También lo hemos dicho a lo largo de estos días. El 40% de todas las emisiones de CO2 del transporte por carretera y hasta el 70% de otros contaminantes en el transporte. La cuestión es cómo mejorar esta movilidad y crear un espacio público. Este es el gran reto común de todas las grandes ciudades europeas, yo diría ya del mundo. Los inversores lo saben. ¿Y qué hacen? Pues buscan constantemente empresas emergentes, startups, donde invertir para acelerar esta innovación hacia la nueva movilidad urbana. Por eso en el siguiente panel nos vamos a preguntar precisamente esto, ¿hacia dónde van las inversiones en movilidad? Al frente del equipo, actuando como moderador, está Matteo Consoni, él es manager de creación de negocios de IT Urban Mobility. Es una iniciativa del Instituto Europeo de Innovación y Tecnología que desde 2019 trabaja para fomentar cambios positivos en la forma en que las personas se mueven por las ciudades para hacerlas más seguras y más habitables. Su objetivo es convertirse en la mayor iniciativa europea de transformación de movilidad urbana. Matteo Consoni, bienvenido a BINVEST Mobility.
Muchas gracias.
Bueno, ¿cuáles son las startups que tienen que estar muy atentas a esta sesión?
Seguramente todas las startups en movilidad urbana que están pendientes de empezar una ronda de inversión.
Pues estamos muy atentos al panel. Adelante.
Muchas gracias. Well, thank you everyone. Thank you for the introduction and thank you BNU for hosting the session. It's a great pleasure for me to moderate such an interesting panel today. The panel of today aims to discuss where are mobility investments going, and to do so we have 4 very high-level speakers that I'm going to introduce in a second. But to start, I want to make a little introduction. So, as we all know, the urban mobility sector is facing major challenges that are affecting our environment, that are affecting our climate, and ultimately also our health and the health of the people we care about. As we just heard, a large majority of European citizens live in urban environment and urban areas, where, first of all, 23% of greenhouse gases emissions are produced by transport. Literally half of the public space is taken up by roads, and on average, we spend 1 year of our life commuting. So considering all this scenario, I believe that startups have a great opportunity to innovate in this space, but they often cannot do it by themselves. They need support to bring their product to the market, to scale, and ultimately to make more livable urban spaces. Often this support translates into money, and this is where the investment perspective steps in. In this panel, we will discuss investment trends in the urban mobility startup ecosystem. And to do this, we have a diverse set of panelists. We have Eva Espinosa, Associate Professor in Entrepreneurship at IE University, that counts on a banking background and many years working with startups in business development and go-to-market strategies. Hi, Eva. Welcome.
Hi. Thank you for having me.
We have Jose Pacheco, managing partner at B4Motion, the first mobility venture lab created back in 2015. Hi, Jose.
Pleasure to be here.
We have Mario Martinez, co-founder and CEO at Vonzu, a logistics startup working on improving last-mile delivery based here in Barcelona. Hi, Mario.
Thanks for inviting me.
And last but not least, Marco Filippi, founder and CEO at the drive-sharing app Volvero.
Hello, hello, everybody. It's a pleasure to be here today.
Thank you very much. So let's start discussing about the first of the three topics that we will touch today, which are investment trends. Jose, I will start by asking a question to you.
Sure.
Since 2010, we saw investments in new mobility startups increased significantly. Investors have put more than $200 billion in more than 1,000 companies across the different mobility verticals. And most of the money and patents are mainly going to connectivity, electrification, and autonomous vehicles. Next to this, we have seen e-hailing, last-mile logistics, and shared mobility players also experiencing a strong acceleration in the number of deals. How do you see this evolving in the next 5 to 10 years?
Okay, you described it very, very, very well. I think what we are seeing today in our streets is the present. It's obvious. For many people, to talk about sharing or ride-hailing is just an English definition, but they are using in a daily basis. But what we are envisioning right now is that there is a new age of vehicles, for example, the purpose vehicles, a new age of connectivity systems, not only for moving people, but also for moving things in the logistic. So what we are expecting is that all the maturity of these first, let's say, 6 years is going to, not to explode, but is going to consolidate in the market. But there is a new age of new businesses that is really, really heavily related with the asset they are using to provide mobility. From a perspective of an investor, this is the place, a very interesting place to put one eye of your 2 eyes of investment. But we see consolidation across different sub-verticals, for example, in parking or ride-hailing. So we will see a lot of merge or the new wave of SPAC. So this is more or less what is going to happen. But we have to be very bear in mind there is a new age of mobility coming from behind the surface. This is very interesting to be connected with, at least in our personal point of view, right?
Thank you, Jose. Eva, continuing on this line, if you were a founder, and you are next to 2 founders, so they will be curious to hear this answer, which mobility vertical would you pick and why?
Well, I think EV, electric vehicles, is a fascinating place to be. I think like in any business, you have always 2 sides, right? You have like the demand and the supply. And from the demand side, what we've seen the last few years is Tesla helping create a lot of demand because they did electric cars, basically, and they made it aspirational. So even though it's not affordable, now people want to have an electric car. And then you have all the other main players from the supply side having at least a hybrid cars in their offering. But then the startups are the ones who are doing the real innovations. Like you have a lot of Chinese EV companies, and one, for example, like NIO, just landed in Europe. They opened in the Nordics because, of course, there's more demand there. It's already the market more developed. But we'll see them coming here, and I think from Europe as well, it's like an interesting opportunity to do something innovations in terms of like business models as well. There are battery as a service now, you know. So I think contributing to this, to the develop of the EV could be fun.
Thank you very much. Mario, so still talking about investment trends, let's shift to one specific trend, urban air mobility. Okay. 2 weeks ago, there was this news, Lilium, German startup working on air taxis, completed a business combination with a publicly listed SPAC, closing an institutional round where also some big European players like Ferrovial are part of. But still, we see that urban air mobility counts for a smaller amount of deals and money if we compare them to electric vehicles and autonomous vehicles. Do you believe that urban air mobility, when I say urban air mobility, I have in mind both the transport of people, but also the transport of goods, which is the business you are in. Do you think that urban air mobility will be able to attract a similar amount of funding like electrification and autonomous vehicles in a few years from now?
Okay. Well, I think it's a very tricky question, actually, because urban air mobility, I think it's more nowadays still a promise than a reality. Of course, everything that looks revolutionary, attractive, it has appealing. It always captures the attention of the funds, for sure, but I think it's not that easy to see this tomorrow as a reality. It implies a lot of actors and a lot of factors taking place at the same time: urban planning, regulation, laws, governance, public policy. I think it's not that easy. I mean, for sure, there are some areas in some countries that can take place, but I think now it's still a bit promise. So.
Yeah. Jose, we were having a side discussion on this before the panel.
No, his definition is really, really good again, because you look at a sector which is absolutely new, not in the way to provide mobility, because you are moving from one point to the other, so you're using an upper level, right, to do it. Our point of view is the technology is in place, is not really well tested. So we need a lot of testing in real environment. But the personal vision of the people here in my company, Before Motion, is that rural is a very interesting place to test this type of mobility, because we have low density areas, but we have a lot of demands for people, just not for make a taxi trip, but for health, for example, or for security. So you have a lot of spaces that you can use today to transform a new system to a well-proof system. Even countries, as you mentioned, right? Probably we will see, we are expecting to have air taxis here in Barcelona or in Dubai, but probably we will see long testing in Latin America or even Africa or Middle East, right? It's quite tough to develop something like that, but the essence of the system is an electric vehicle and an autonomous one, right? Combined, right? So let's see what happens, but we see that the testing probably is not where everyone is looking or expecting that it will happen. But for me, it's very promising, not just the air taxi, but how we move with this type of transport and how we combine it with the rest of options we have.
Yeah. Marco, any thought on this? I know it might sound very futuristic, but how can this relate to your business as well?
Yeah, so that's a very interesting point, the one raised by Jose right now, because I really think that it's also about the type of market in which we are testing such as solutions. So I expect that probably this kind of innovation is not going to happen in the most developed countries because of many reasons. There are a lot of laws and regulations that, stratified all over the years, so it's pretty complex to roll out something there. But probably in the emerging markets like Latin America, Asia, Africa, I think that that's where we are going probably to see the testing field for this kind of innovation. And yeah, I totally agree also with what Mario said. It's something that it's different than what we are used to today, because for us, the concept of getting around is okay, like something related to a terrestrial movement. And so also understanding that there can be a sort of commuting related to air mobility is something that we are still have to explore and to understand what are the pros and the cons of such a solution.
Yes. Yep. And thinking about the pros and shifting a bit the topic towards green economy. So we mentioned at the beginning that environmental issues definitely push for green economy solutions. As the IT Urban Mobility, for example, we have a mandate to look for social and environmental impact together with the financial impact when we drive our investments. But I can understand that for private investors, this can be a different story. How do you see mobility investments going in this sense from a startup perspective?
Yeah, so that's another very tricky question. Thank you for for that. But yeah, I think that it really depends on the type of company that investors are looking for. So in our specific case of Volvero, there were like two moments in which we were looking for the funding that was for an initial R&D and development, and then for scaling the operation while we were self-sufficient during the go live and go to market strategy. So in our case, we needed to be supported in our early stage, and I think that's where investors should focus nowadays, especially because for startups, I don't see a lack of funding in at a later stage, where you have institutional investors or banks that can help. But there is a pretty big gap in the moment when you are moving from the idea and the initial stage of your company to bringing it to the market. So I think that the money of investors should really be channeled in that particular moment, so the early stage of a startup. This because investors are financially educated and they can understand what they are doing, while most of the population do not have this grasp on investment. So it's too risky for someone that is not a professional into this to do that for an early stage. And also I think that investors can really add a lot at a very early stage of a startup, especially when maybe the startup is founded by a young team, you know, so the team needs to be integrated with expertise coming from an investor, for instance. So I think that that's where investors should really put their focus on.
I think there's another layer as well of it, there, that is how to measure the impact that these type of startups have. Okay, so like, because these type of investors who will invest in the startup early stage are not only looking for a business opportunity, but they also care about the purpose, right? And I think that's where it becomes a little trickier. Like, how do you measure how much CO2 we're stopping to produce or things like that? I don't know. I think it gets trickier there.
Yeah, no, for sure.
Yeah, I can add something to this very interesting point that Eva just raised. And I see also some financial indexes that are now developed exactly for targeting this problem of understanding also what's the impact of an investment into the society. So it's not just about the reduction in pollution or in number of cars or trees saved, but there are also now some financial indicators such as the social return on investment that are very important for a startup and also for an investor to take into account and to be shared with the community or the ecosystem to show that something is really done. In the case of the social return on investment is, okay, if we put €1, $1 into this startup, what will be the equivalent value, or what will be the amount of value generated in benefit from for the society, for the environment, for the municipalities, you know?
Yeah, I'm absolutely okay with you. I think there is, you have a lot of pressure from the investor ecosystem, because you have impact fund, with very clear over a goal on what you want to create with your investment. But then you have a lot of LPs investing through venture vehicles that have their ESG policies internally. So there is a lot of pressure on to get something which is a positive impact in society. And I think that in the other side, which is the startup, we have two different types. The one who is doing their activity and then generate a social benefit or social impact, and the ones that, by definition, they are a company that generates that, right? Because you are in the EV ecosystem or because you are manufacturing a new vehicle that is produced by sustainable materials, for example, and you have all the full cycle of the material. So I think, I remember when a conversation with my friends like this, that it's the first time that it doesn't matter the angle you talk, you hear this, where my investment is going, not only in terms of profitability and return, but also in the impact in the society. Mobility is a great impact generator, right? Because as the presenters did, we have a lot of impact on daily basis activities in our cities.
But Jose, I'm curious, from a VC perspective, do you have any system in place at the moment to look at environmental climate impact together with the financial impact when you look at your deals?
No, we are focused on the first type that I mentioned, in companies that by definition in their core, they are generating a business that has a positive impact in society, or because at the end in mobility, green effect is even higher, right? Not only in society, maybe you can create something which is more useful for the whole population, but we look for a company that has a meaning inside the company. You don't have to put KPIs on evaluating your impact because the company itself is generating something which is good for the environment and for the ecosystem, right?
Yeah.
I would like to add that sometimes it's really paradoxical and complex to accomplish with everything, right? Because maybe your purpose as a company, it's driven by something that wants to mean an impact. You want to make an impact. But then it's very complicated to have a social return. For example, that we are in the logistics space as a software company, we see that we are helping all the companies to move the goods better, but then the tendency of the market is to pay less to the people that is moving the goods. So then it's really complicated because at the same time that you are trying to improve a sector with an impact, a positive impact in terms of reducing CO2 or improving the mobility of goods, then there are other economic trends that, you know, it's very complex. So sometimes it's very difficult to accomplish with everything.
True. But I mean, I see this a bit changing also after COVID, and I'm curious to see in the next 10 years if maybe there are going to be more pressure from stakeholders that are involved in VC funds or in institutions like ours, no, to look for more socially oriented impact deals. I mean, what do you think about this?
To be honest,
you got
I think
yourself into.
yes. No. I'm foreseeing a pressure not to do big efforts by company, but the whole ecosystem producing something which is better than we came from, right? It's happening at the higher level. When you go to the stock exchange, you have big funds, big group of investors that are just investing in companies that produce a positive effect. So this is going to go down until the last investment is not easier than to the stock exchange. But the good thing is about the startup, you have a small group of people that if they have a clear overview of what they are doing, you have a more powerful team doing things easily, right? This is my personal point of view for the coming years.
I think there's also like maybe one last leg to this issue, because we're talking right now about private investment, right? But then what about public investment? Because infrastructure is critical to be able to continue developing this type of initiative and startup. So I know we were talking about, okay, maybe some of these innovations can be tried on Latin America or Africa where regulations are not in place just yet. But it's true that once you have the startup running, you need certain infrastructure, you know, frameworks and so on. So let's not forget about that.
Yeah, I agree.
Yeah, I wanted to ask something to Jose since his experience.
Oh my gosh.
So yes, you said that nowadays it's very important for investors to understand also where are their money going, you know, and what's the impact they have on the society. So what caused this change into their perspective? So are investors today good people and the investors of 10 years ago were evil or bad people. So what, of course I'm joking, but what was the driver of this changement?
I fully understand your question. No, there is no good or bad. Investor needs a return on their investment. That's the essence of the business, right? Yep. The difference is that I think that today as a society, and that includes investor, we are not looking just for the return. We put more things on it, right? So you have the option to select. Probably you select the company that get most beneficial effect on the society. But there is no good or bad, or is that the evolution and the knowledge of the society right now is absolutely radically different than 10 years ago. You don't have the same mindset of investor 10 years or 20 years than today, because you have young entrepreneurs, but also you have young investors right now, right? And it's not also the young ones, also the older ones that are this new mindset of, okay, we are doing things because we want to change things, we want a return, but maybe we can combine both things and invest in the right company if I have the option, right? Which is a very important thing. This is usually happening in the last 10 years or 20 years in the impact fund, that they have a very clear commitment and mandate from the LPs. But it's now happening more because you have a lot of corporate investors that have ESG commitment with their stakeholders or even their workers. So you have more pressure on the system to provide more, let's say, smart investment, not only efficient investment.
I feel like also 10 years ago you had like the stigma that impact investment was not as profitable as investing in other startups, where the founders were really focused on the financial and the business side. And I think that's already behind, thankfully.
Sure.
So I think that's also basically the mindset, as Jose was saying.
So Marco, since you asked a question, now a question for you. Shifting topic to industry. So we talked about investment trends. Let's talk about collaboration between startup and industry from an investment perspective. There's this interesting data that we see that more than 90% of investment in the mobility space, they come from non-automotive players, like VCs, funds, private equity, tech companies like Samsung, Intel, Google, Apple, Bosch, and so on. Non-automotive players. At the same time, we see the number of cooperation projects between startups and automotive players growing. What do you expect from the big industry players into the market? Do you look at them like clients, investors, or what?
I really like the question because it's really into the topic. And for me, the fact that this kind of corporate, like car manufacturers, are not investing as much as other type of investors, for me it's great because it allows for the innovation to happen much faster than if you had this kind of investor investing directly into startups. Because we saw many times that maybe some big name in the automotive industry took a position into a startup, and that's when the startup start slowing the pace, because then you have someone that comes there and tells you, no, you cannot do this because the market standard is different, no? So you cannot do this, you have to do this. And you end up doing what do they want, because of course they are your investor and they own a chunk of your company. And that's, for me, it's one of the the biggest mistake that a startup can do. But that's just my perspective. So I still prefer having a purely focused financial investor in my company and collaborate with automotive brands for indeed pilots or also for an exit. It's great when I brought the company to a stage that, okay, it can be implemented in a bigger company, in a multinational company. That's perfect. But I don't think that this kind of company should invest in an early stage startup. Otherwise, they will just slow down the pace.
Mario, how do you think is this for logistics?
Well, so there is no logistic operator investing in any last mile delivery startup company. That's kind of weird when this type of new companies, new startups are penetrating the market. So of course they are avoiding something that at the end is a very good cooperation, right? I really think that it's difficult when you expect to get money from a corporate, unless this corporate has found a CVC, a corporate venture capital, because they are taking money out of their business, that it's a completely different business, and putting this money in a risky business, right? So as Marco said, I mean, they are not financial players. They can behave, but it's kind of risky. And I think that for them makes more sense to collaborate, to co-innovate with companies, because they can get knowledge, they can take an advantage of working with them, and also it's way cheaper that funding startups. So I really think that this is the way of
Less risky also, probably.
less risky and faster.
And Eva, when it comes to you, when you work with startups in business development and go-to-market strategies and so on, what do you tend to suggest them in this sense?
Actually, yesterday in dinner we were talking a little bit about that with Danny, because from EIT. Because I was saying, I think the most important thing is to share the vision between investors and founders, and then there is no clash in terms of like the kind of decisions you take to get where you want to get. I mean, just sharing the same vision for me is like key. If that's not a thing that we have in common, it's definitely a deal breaker. If you don't know, how can you take steps if you're not going to the same place?
And maybe, Jose, from a VC perspective, when you look at the cap table of a startup, where would you like to see? Would you like to see an industry player there, or do you prefer to have it as a client?
Just to catching up with the question,
yes.
I like the first part of the question, which is which kind of company are investing in this startup? A part of the automotive companies, mobility is a wide concept, so we have reduced the barriers for entrance. Traditionally, automotive company has been dominating this space, but now you have telecom companies, you have a lot of new players coming to the play, directly as a company or indirectly because they are LPs of a fund that invests in a vertical or in a technology. I think that the question is not just for the investor, it's for the funders. I'm also a funder because I have a lot of previous experience in the others, let's say, the other side. I think the right moment is the right moment for the entrepreneur. They decide which is the best partner, the best companion. The corporate has transformed the market because they invested or just made acquisition, then created the corporate venture capital, so they are also transforming themselves. But still, you face in many cases what you mentioned, right? I get to gridlock solution, right? I don't know what you want, but I really understand what my company as an entrepreneur needs, right? So there is no one side or one answer. It depends fully on the entrepreneur to decide which should be the partner, because an investor is a partner. It's not just only money. Yeah, you should demand more than money, right? The moment and the momentum for each entrepreneur defines what they can do. That's the essence. We like to see other corporation in our investment. We invest in early stages, so we prefer to be the first on hand to hand with the entrepreneur, right? This is our point of view. But at the end, you have another corporate in the cap table. Is a stakeholder, right? You have to work together. I mean, but yes, it's a tough decision sometimes that can accelerate or, as you mentioned, sometimes shock the company because you don't have many options to move
But
forward.
I've seen sometimes it's a mistake that some early stage startups do when they get involved with a corporate too soon, and they end up, if they are in that stage when they're trying to get product market fit, what they end up doing is kind of like adapting their product to that specific corporate, and then it's really hard for them to scale up. So my suggestion from experience would be to just not marry a corporate too early.
It depends what marriage means, right?
It's complicated.
It's
always
complicated. It's complicated, I agree.
Totally true, yeah.
Well, I mean, connecting to this question about timing, which is really interesting. I know this might be a very generic question, but Mario, since you recently closed 1.5 million round with Vonzu, congratulations, by the way.
Thanks.
When do you think is the right time for a mobility startup to get funding, and from whom?
Well, I think that's a complicated question, and I'm going to answer with my personal opinion. It depends what are you looking for, right? If you want to create a business that makes an impact, that makes money, that it's profitable, you ask for money when you need it in order to grow faster. That's my true opinion, not to spend more. And I think this happens in every space. I mean, for example, if you're in the health tech and you want to, I don't know, develop something, a prototype that's super expensive, or in other markets, for sure you need this money from before, because otherwise there is no idea being real, right? But we ask for funding when we need it in order to grow faster, to sell more, and that's my opinion.
Marco, are you looking for a specific profile for your next round, if there's going to be one?
So, in my experience, the best investor, at least for what we needed as company, as Volvero, it's that kind of investor that give you the money, but give you also freedom to operate, you know. So I think that our team is quite good, and we also have a good network, also thanks to, of course, the EIT Urban Mobility and the previous investors. So we don't really need right now an investor that is hands-on and want, you know, to have a saying in the decision that we take as founders or as a managing team. So in our case, it's just an investor that really can support, maybe as a network, because that's very important, of course. But in our case, that's what the kind of investor that we were looking for, that we will be looking for probably in the future, at least for this startup, you know.
Interesting. Jose, I think this relates to what you hear, or
No. I mean, okay with all the comments. As I said, there is no company which is equal than the other. So I think for us, as a corporate venture capital, but also as a venture builder, we used to say that we are to respond to their demands, whichever it is, and whenever and wherever. So that's for me how to support. Don't try to do things that you are not demanded, right? So. This is at least our point of view, which is an efficient way to support a company. Is just try to catch up with them, understand very well what is in the mind of the company and the entrepreneurs, but don't try to put your boots in their boots. Just support when they are demanding something. If not, just looking how the company is going, and that's all right. That it should be, but not all investors have the same propositions and same vision, right?
Yeah. Okay, so we talked about trends, we talked about relation with industry players, and a bit more in general about strategy with investments. Let's talk about another interesting topic, which is regional differences and how investments are moving around the world, basically, in the different markets. I have some interesting data to start with. So first of all, well, in 2020, we saw investments in mobility falling by almost a bit more than 20%. But this might be related to COVID. I mean, there are a lot of reasons why. The good news is that in the first quarter of 2021, there was a new record registered, which was more than 20 billions invested in mobility tech ventures. The interesting fact is that EU receives only the 5% of the global funding in mobility startup, so a very tiny amount. But at the same time, it accounts for almost 20% of the deals. So it looks like 20% of the global deals are happening in the EU, but with less than 5% of the money. Germany, France are the most active VC markets in Europe. Spain is doing also quite well. In general, I think that Europe, the characteristic of Europe is governmental support. Yes? So the situation is still uncomparable to US, Japan, China. So let's start with the startups, and then I come to the two of you. If you were a startup listening, and also like I'm curious to hear your strategy, do you think that Europe is a good place to start up? And would you suggest fundraising outside Europe?
Yeah, so the easy question is yes, it's better to start the company probably somewhere else if you just have to take a look at raw numbers. But you cannot just reply by that. You also have to understand where you as a founder saw the opportunity and where is like your better understanding of the market, where you have your own connections. Because if I saw an opportunity here in Europe or in Italy, how it was at the very beginning for Volvero, it doesn't mean that if I go to the United States and I say, hey, let's start Volvero here today, it will be a great success, because the market is totally different there. And even though if there is maybe an opportunity there, I don't have network, or let's say that I am someone who doesn't have network there. So what I'm going to do there? Nothing. Of course, in the United States, there is a different ecosystem for early stage startups. But when life gives you lemon, you make lemonade. That's what they say. So we have to try to compete on something different than just thinking of the investors' opportunity that there are in the United States. Like, for instance, you mentioned during the question that there are a lot of funding or funds coming from governments. And that's an added value for us, an asset, because that allows us to, as founders, to keep the control of the company, without diluting. And that's good when you grow and compare the same company with an American company, in which maybe the founders are already diluted of 30, 40, 50%, and maybe here in Europe you still have 90%. So I think that the catch up among the two different ecosystems, and I'm just comparing United States and Europe, the catch up is happening, will happen, especially when we will have more and more exits from current EU-based founders. So I think that in the next 5 years, there will be a quite similar scenario for early stage startups.
Well, I think that US, it's a whole market. There is a lot of money in funding, and you as a company, for you it's easy to sell in one state and the state close by, because it's the same language, same regulation, same culture, same everything, right? In Europe it's different. You have countries, same governmental, institution, but it's different. And then it's what is happening is that every day more and more startups from different countries of the European Union are selling abroad. And for a VC, it makes a lot of sense to invest in these startups of our countries, because we have lower cost. Basically, if you want to fund a startup in Switzerland or in the United States, it's way more expensive than building it in the south of Europe. That's the reality. But if you are cheaper, but you can be that successful when selling abroad, then it's very attractive for the funds. And for this reason, I think that justifies your numbers. But at the end, Asia, there is too much people there. In the States, there are a lot of people also living there. In LATAM, that you can conceptualize LATAM as a region. There are a lot of people there, so it's normal that funding goes there.
Yeah.
But
I have a controversial opinion in this one. I think
That's
that I think that because in Europe there is so much support from EU, then it's like entrepreneurs have more access, at least in the early stage, to even to go to Series A, to funding. However, I've worked personally with a lot of startups in Latin America and even in Africa, a few, and there's no options. Like 5 years ago, they didn't have any options. They have seed round, and then for a Series A, there were no VCs in some countries. So they had no other option than looking into the States or even to Asia in the case of Africa. So that kind of like pushed them outside of their comfort zone, but also they gained a little bit because they were getting better valuations, of course, and stuff. So I think it's not, and there's no need to move.
I agree.
To add one point to the comments, I mean, if you Google, and you could find all the entrepreneurs' advice about how to raise money, when, in which country. You have a lot of information. But for me, mobility is a global industry, but it's very regional. So here in Europe, we have a perfect environment to fund a company, not only because the public investment is because the social, the technology, the infrastructure that we have. So if you go to US, probably you can set up and create and fund a new mobility company, but with a total different goals and total different environment to play, right? So for me, is you entrepreneur want to start a company, look at the technology, look at the social demographic, look at the social trends in each part of the world, because mobility is a bit different. Give you opportunity to compete in a regional level, even if you have big companies operating global. And what we have seen during the last 5 years is a lot of venture capital coming from the US to Europe because of this.
Yes.
Just because of this, because it's a good environment to create and to invest in companies. So if we don't go there, they will come here. So that's the essence for the people that are thinking about in the mobility sector. Think about global, which is the purpose of an entrepreneur. But mobility is regional, you can take advantage regionally.
Yeah. Thank you for the answer, Jose. So we are running a bit with the time. I would like to conclude with one quick question for each of you. After all this discussion, can you define, I will start with you, Jose, with maximum 3 words. How do you see mobility in 10 years from now?
I will say 3 words. Well, that's a good. I will say universal, responsive, and interoperable. These are, for me, the 3 covered.
I have 2. Can I be 2?
Of course, of course.
I think air and sustainability.
Air and sustainability. Nice.
Public-private
Okay.
and integrated.
Okay.
Cool. And before this panel, I just had 2, which are shared and sustainable. So I agree with Eva. But during the panel, I also found the 3rd one that was missing, thanks to Jose, and it's evolution or evoluted in terms of the changes that will happen in the society.
Sounds great. We will get back to this in 10 years from now to see if we guess right.
Ready?
Fantástico, qué interesante. Y esta última ronda, ¿no?, donde hemos concentrado estos conceptos. Bueno, a mí me ha encantado esta discusión entre buenos y malos. Ya ha salido incluso el matrimonio, ¿eh? Hemos hablado de matrimonio. Vamos a dar algunas claves, ¿eh? Aquí, de una parte, las startups y los inversores, cada uno un poco marcando su terreno de juego. No hay que casarse con una startup muy emergente. Vamos a esperar un rato las relaciones. Esto es como en todo. Amor a primera vista con las emergentes, no. Pero sí es importante para los inversores compartir la misma visión con las startups donde van a invertir. Nos insistía Marco en que, bueno, yo casi prefiero que los inversores vayan a su tema, que inviertan, pero que no se metan con la filosofía de la empresa, que nos dejen hacer, por favor, que confíen un poco en nosotros, ¿no? Que no sean invasivos. Eso también me ha quedado muy claro. Lo de los buenos y los malos. Se ha dicho aquí, si antes los inversores eran más malos y ahora son más buenos. Bueno, me ha quedado claro que es que ahora los inversores miran más cosas que el dinero. Aparte de la parte económica, ese beneficio, ese retorno para la sociedad también es importante para los inversores y startups. Eso hay que tenerlo en cuenta. Y contad vuestras historias, porque dicen, buscamos compañías que tengan un sentido, pero ya que nos lo cuenten, que no tengamos que buscar el sentido, por favor. Eso forma parte de la comunicación, ¿no? De ese elevator pitch que toda startup tiene que tener clarísimo. ¿Qué más? ¿Qué les interesa a los inversores? Bueno, que estas nuevas tecnologías, ¿no? Aéreas, este futuro de la movilidad se pueda probar. Es difícil probarlo en Europa, en Estados Unidos, donde la legislación es compleja, pero en cambio es más fácil en mercados emergentes. Aquí se ha comentado, en América Latina, en África. Bueno, es un buen sitio donde hacerlo. ¿Qué buscan los inversores? El sharing, la compartibilidad en la movilidad eléctrica. Eso y muchas más cosas, pero bueno, esto es lo que ha salido en este panel interesantísimo. Gracias a todos por acompañarnos esta tarde. ¿Y ahora qué vamos a hacer? Pues vamos a tener un inspirational speaker. Ahora nos visitará Andrea Vilallonga, asesora de imagen personal, formadora, facilitadora, coach y speaker internacional, que nos va a hablar de las ventajas del activismo positivo. Venga, hasta ahora mismo.